Hello and welcome back to this episode of the Day Trading Bootcamp. In this episode, we're going to discuss fair value gaps. So a fair value gap, or an FVG, is a 3 candlestick pattern. We have 3 candles. We have the first candle. We want to look at the wick. The top of this wick is not as low as the bottom of the third wick. As you can see, we have a little gap in between the wicks, and the body has a little gap in between here. This is a fair value gap. So fair value gaps are a very building block concept in ICT. We will be using it to determine a bias, to target things in the market for take profits. We will use them as entries, and we can also use them as inverse fair value gaps, which I will go over in a different episode. So when this third candle is forming, if we see it push down, it starts to form, say it's going red, it's going green. If we see it push down further than this wick, say we push down here and then we come back up, we close bullish, that's not a fair value gap because we will have left a wick further than the top of this wick. It's lower, so there's no gap in between here. But the gap can be very, very tiny. Doesn't have to be a large gap. It can look like this. This is still a fair value gap. So in a fair value gap, we want to see price, if we're in a bullish uptrend, we want to see price retrace into a fair value gap. There we can look to take an entry, long on the fair value gap, stop loss under, wherever. And we want to see price tap into the fair value gap and continue the trend after tapping the fair value gap. So it's the exact same thing for bearish fair value gaps. We want to see that gap in price, the gap between the wick. So if we look at the actual market, we can, remember they appear on every time frame. So now I'm on an hourly time frame. We can see fair value gaps in the market. So obviously the first things you notice are these large fair value gaps. We have these large fair value gaps. But also if we zoom in, we have these small fair value gaps on same time frame, but they're smaller fair value gaps. So I want you to see this bearish fair value gap that we have right here. So now zooming into a 5-minute time frame, I'm on a 5-minute time frame. In that same fair value gap, this was the 1 hour fair value gap right here. We zoom in, we can see price create a 5-minute bearish fair value gap inside that bigger fair value gap. So we can put on a short here, short, and where are we targeting as our targets? Well, we have this fair value gap right here. This can be a target. We have this fair value gap right here. This can be a target. We have this fair value gap right here. And we also have this bigger fair value gap right here. So as I was drawing that out, you actually couldn't see the fair value gaps because I'm an idiot, but these are what I was drawing out. We have this fair value gap that you could target. We have this little fair value gap that you can target. And we also have this bigger fair value gap over here that you can target, and you can take profit on these. So we can use fair value gaps to determine a bias. We can use fair value gaps on any time frame. We can use fair value gaps as entries, and we can use fair value gaps as take profit points. So that is this video on fair value gaps. Very simple concept, very easy to spot in the market. We're going to continue to use them within the concepts I show in the videos. Going to continue to use fair value gaps. But thank you for watching this one. If you have any questions, leave it in the comments below, and I'll see you tomorrow. Peace out.